I'm Toby Lynn, and I'm with the mortgage firm. I'm right downtown in Punta Gorda. I'm in the greenhouse, which is next to the purple house, which is next to the orange house, which is next to the blue house. That's where my office is. If you want to pop in just to ask any questions, that's where you'll find me. And I'm going to talk about a couple things: reverse mortgages, and also the other type of mortgage is actually known as a forward mortgage. So we're going to talk a little bit about planning and a reverse mortgage. And we're going to also talk about home priorities and veteran opportunities. Do we have any veterans, eligible veterans in here? Fantastic. Okay. So there's a lot of myths and misconceptions about a reverse mortgage, and it has evolved over the years. So first of all, a reverse mortgage can be used for quite a few different reasons. One would be to eliminate a monthly mortgage payment. Another one would be for supplemental income. Paying for medical expenses and in-home care. And a lot of people don't realize it can actually be used to purchase a home. Pay off debt, obviously. And I like the enjoy your passions with financial ease. So if your retirement planning includes going for a year on a cruise ship or something like that, it's a way to use supplemental income. A HECM is what they're called, home equity conversion mortgage, and it's also known as a reverse mortgage. It is only available to somebody that's over 62 or older. And it gives the person the option to convert their equity into a monthly cash stream or just take away the monthly mortgage payments. One of the misconceptions is that the borrower is required to sell their home, or they give up title, or the bank takes over their home. That is not true. It's just like any other mortgage. I have a mortgage on my home, and basically it's my home, and I just owe the bank money. Now, even though there are no payments involved with a reverse mortgage, the homeowner is required to pay taxes and insurance. That's required to be kept up. And the loan does not have to be repaid to the lender until the home is sold. And a lot of people, again, just are under the impression that the bank totally controls what they're doing when they have a reverse mortgage. So some of the myths and misconceptions is that the home must be debt-free. The reverse mortgage is based on a formula: how old the borrower is and how much the equity is going to be. The only time credit is really taken into consideration on a reverse mortgage would be if the borrower has a lower, they don't really look at credit scores as much as they might look at history. So depending on the borrower's credit, there might be required a set aside to pay for those taxes and insurance to make sure that they're being paid. Otherwise, the homeowner pays those bills themselves. Again, the misconception, the bank owns your home when you take out a reverse mortgage. It's the same. Has everybody in here had a mortgage on a home at one time? So you all know it's your home. You just owe the lender the money. Reverse mortgages are for desperate seniors or are for house poor people. That is not true at all. A reverse mortgage can completely be part of a financial plan. So it is not, again, necessarily at all for financially desperate people. when the reverse mortgage comes due, the bank sells their home. Not true. The buyer, the borrower, is never forced to sell their home. And the heirs do not include, they don't owe the debt. So it's strictly the homeowner. The heirs do not end up taking on that debt. There have been a lot of changes over the years on reverse mortgages. And I do think at one time that maybe did pass down, but that has not been the case for years. So I'm going to go into talking about regular mortgages and how that could have to do with senior planning as well. Oh, since we're being recorded, I'm required from a compliance standpoint to say I am with the mortgage firm and my NMLS number is 157539. So y'all got that? That's very important. Home priorities, condo or single family home. I have a single family home. I think one day I'll probably go condo. How many of you are in condos versus condos? So it's a lifestyle choice. And years ago, I thought, well, why would I want to pay all that money for a homeowners association fee? But I pay just as much between the yard guy and the pool guy and the guy that comes around and sprays my yard for bugs and all that. So the condominium versus the single family home really is a lifestyle choice. Things to consider is pets. Pets can be really important part of a decision where somebody chooses to live. If you're going condo or into a neighborhood that does or doesn't allow pets. I'm working with somebody right now who's selling they actually have they're in not one of the nice manufactured home communities, but she's got 2 dogs and she really was only allowed to have one. So she's selling her home because it's like giving up one of your kids, right? To give up one of your dogs or your cat. How important is the pool or being on the water? Handicap access. Are you somebody that really wants to be able to garden? So there's all these things that are important to us, and these priorities change, don't they? So here in this really hot market, has anybody heard that the real estate market's a little hot right now? One of the big issues has been a homeowner wants to move, but they don't want to get their home sold because right now, what does it take, 4 hours or so to get your home sold? Exactly. I mean, who wouldn't, right? But were they going to move? So that's one of the issues that we're having right now, I think, with inventory, that there's not that much inventory out there. Because as a homeowner, if you're interested in selling, you darn sure don't want to be getting the home sold and then you have no place to go because you haven't found a home yet, or you've been beat out of the last 8 offers that you've written, because that really is what our market has been like. So there are a few ways to juggle the options. There's the obvious, you don't have to sell your home to buy the new home. So you buy the new home and then you get the home sold and moved out. One of the things that down here, so I close in Florida and Georgia, specifically Atlanta, when I'm closing in Georgia. And it's very common in Atlanta for somebody to sell their home and get to stay in their home for 3 days is a given, and easily longer. And down here, that has not been at all what the norm is. And so one of the things that has helped home buyers buy homes and helped sellers be willing to sell is that the buyer gives the seller what we call a rent back. So they buy the home, they close on the home, that gives that seller the money because they closed to go into the new home, and there's an arrangement between the buyer and seller that is totally negotiable. I am working with a purchase contract right now for somebody that their realtors negotiated the seller can stay in the home for up to 60 days at no cost. But it helped that buyer buy the home and it helped the seller sell. So it's completely negotiable between the parties. Everything in a real estate sale is completely negotiable. It always was, but then we had the longest time where just this is the way it's going to be, and that's what people accepted. But you're exactly right. It has always been completely negotiable. I'm really big on forget qualifying. One of the terms that I have never liked, this is my 34th year, by the way, of being in the mortgage business. So COVID has certainly brought on a few changes in the industry, and there have certainly been changes along the way. But one of the phrases I was going to say that I've never liked is, do your pre-qualifying so you can see what you can afford. I don't believe that what somebody can afford is really what the answer is, because there's so much that goes into that. It's more, what is your comfort level? Assuming you qualify for however much you want, but also what is your comfort level? And I think that that is totally more important than anything else, because you might have expenses that don't have anything to do with qualifying. One of my slides coming up is I'll work with people that are helping send their children or grandchildren through college, helping to subsidize a parent or a child with their monthly expenses. There can be all different types of situations that we're in. So from a mortgage planning standpoint, there are a couple of unique opportunities for seniors. And in this case, in the mortgage world, a senior is anybody over 62. So the obvious income sources that qualify is Social Security, disability, pension. Somebody might still be working. I'm 67. I sure go in every day. I have never gotten tired of doing what I do. So one of the unique opportunities for seniors as far as qualifying goes is that if somebody is over the age of 62 or over, I'm actually able to take their assets and turn that into a cash amount, a cash stream, a monthly income amount. They have to be over 62. I keep saying over 62, but it's 62 or over. And I can do that through their IRAs, their liquid brokerage accounts. We might look at capital gains. It all depends on where that borrower has their money parked. I'm working on a loan right now for a young couple under the age of 62 that have several $1 million in the bank, but because they're under the age of 62, I couldn't use this for them. And we had to actually go with what we call a non-agency loan. Is that the stupidest rule ever? I have never understood. I just have never understood that. But so 62 and over, we can actually qualify a borrower based on their income. I can also take a borrower's assets and set up a distribution. I don't set it up, but their broker will set up a distribution. That's really fast and easy to do. I do that a lot down here. And there's a couple rules on what I have to use for the qualifying, but I might be able to take what they have and let's just say $3,000 a month. We'll have their broker set up a distribution. It takes just a couple days to actually get that first check. And I'm being recorded, so I'm not really going to explain that that can be canceled after the closing. but we do that a lot. Again, to qualify, borrower has to be 62 years of age or older to be able to do that. So especially down here, where our demographics are, most of the people that I work with are retirees or at least over the age of 62. So we do that a lot. You're under contract. So one of the issues we're having, has anybody heard of appraisal issues right now? And what's happening is so many homes are being sold that are over the list price, over what they're going to be appraised for. And how that affects the loan completely depends on how the loan is structured. If I'm doing a loan that there's a 95% financing, I have 10 minutes, okay. Then that lower appraisal will definitely affect financing. If somebody's putting a large down payment down, the lower appraisal may not affect us at all. I have both of those situations going on right now. The way a mortgage works is it's always going to be based on the lower of either the contract price or the appraised value. So sometimes it matters, sometimes it doesn't. I had a closing 2 weeks ago that the borrowers brought an extra $55,000 to the closing table because of the appraisal. We are having a lot of appraisal waivers right now in the contracts as the contracts come to me because the buyer is perfectly happy with what they're paying. I mean, really, let's face it, we still have a really good housing value here compared to a lot of other areas. So even if somebody feels like they're paying top dollar, we really do still have a great housing value here. VA loan, I want to talk about VA loans. I am a VA certified loan officer, and I have veterans tell me things that are not correct, which is maybe somebody might tell me, well, I've already used my VA benefits before. You can use your VA benefits to get 10 mortgages. You buy a home, you get your VA, you sell it, you get another home. You could even have more than one VA loan at a time. It's all depending on eligibility. And as far as jumbo loans go, so a jumbo loan is any loan that's over $548,450. And VA really, if somebody is eligible, I think is about the best loan going. There's really great opportunity for VAs. It's not just about 100% financing. A lot of people think that it is. It could be we're doing 100% financing, but let's say that veteran wants to use their money because the home needs new flooring, they want to put it into home improvements. Or it might be they're still putting a down payment down, but the interest rate's better than on a conventional loan. So I will say something about VA eligible spouses. A VA loan is going to be eligible for a veteran and their legal spouse. It's not going to be for a co-signer that they are not married to. Here's another issue that I have down here a lot is that a lot of our demographics are people that are nice and successfully retired and they don't need credit, so they don't get credit. Ever since credit scoring started, which I've been in business since before we had credit scoring, I don't know how long it's been around, maybe 20, 25 years now. I don't even know. But credit scoring changed the whole concept of you don't need credit, because the only way that the credit scoring model can judge us is by how we utilize our credit. So it's always recommended that somebody has preferably 3 credit cards. I would say even if you don't use them, I've got one card. It's a Chase card in my wallet since I've had since 1985. I don't really use it that much, but I make sure I get gas or, something about once a quarter, because if you have a lack of activity, the creditor will close the account. You won't get any notice about it. And once that account closes, you lose all that really good history. Credit scoring is important for us, not just because somebody needs a mortgage. It actually can affect your insurance rates. It can affect a lot of different things. So it really is important, even if you don't need credit, that you utilize it because of credit scoring. This I thought was in the handout, but I don't think it made it. I'm super happy to email this to you if you call me for it. It might not be for you. You might have a kid or a grandchild that you want to forward this on to, but it talks about what actually makes up our credit scores as consumers. Linda, how am I doing? 3 minutes. Okay. So again, it's not just about qualifying or what somebody can afford. I also have, if you want, you can call me or email me. You have my email, a budget that I can email to somebody, because there are a lot of expenses that we all need to take into consideration to determine our comfort level. Working with a realtor, even though this is a crazy market, if you are going to put your home up for sale, I do not at all recommend that you think you don't need or want a realtor to work with. And if you do need a referral to somebody, call me. I work with some really fantastic realtors that I would be super happy to refer. Condo versus lifestyle, we discussed. Closing costs, this is another thing that's completely negotiable. In Charlotte County, it's pretty typical that the seller pays the owner's title insurance, and then the documentary stamps are pre-written into the contract. But everything is negotiable. And as a seller, if you're going to be selling your home, really the only thing that matters to you is that net. How much are you walking away with, right? I mean, that's really only thing we care about. And I've had sellers say, well, why would I pay somebody's closing costs, or why would I make a contribution to that? Well, as a seller, if you're going to net the same amount, because let's say instead of negotiating the price down a little bit, it's full price with a contribution. As a seller, you really only care about what you net as opposed to the structure. Choosing a realtor, choosing a lender. I wish I could stop the recording. I'm going to tell you that I think experience matters as you're working with realtors. What you know about maybe the neighborhood, the development. My time is up, and people have told me Linda is tough. When when your time is up, it's up. She's already getting up. I hope this has been helpful to you. Pop by my office, call me, text me, email me, anything, any questions I can answer, I'm super happy to do that for you.
that.
Yeah.
Can they hear me now?
Yeah. And just
That's how you turn it on and off. We should just be fine to leave it on. We are recording, so the shot is from about here to the edge of the screen. So,
Where do you want me to?
ideally in this area, from in front of the lectern to as far as the screen, from there to there, and we'll have you. But mostly, we just want to record your voice.
And this goes
And
forward.
that's right. To the right will be to advance. Left, should you need to go back. And that should be that.
Okay.
Cool. Break a leg.
Thank you.
You got it.
This is on. You can hear me now? Nice big crowd. Hello. Thank you for coming. Okay, I think we're ready to start. Everybody can hear me? Thanks for coming out today. My name is Dave Marziali. I am the insurance guy because my last name is very hard to pronounce unless you're Italian like I am. So I call myself, instead of Dave Marziali, I call myself Dave the insurance guy. And that's a lot easier. My middle name is The. No. And I lead a team of agents who specialize in Medicare insurance. And I've been